Hey everyone, Couch Investor back to our earnings video for today. So we're starting the week with SoFi. They did it, beat and raise yet again as predicted in yesterday's video. So what exactly has happened? Well, let's first start with a couple of comments here from the CEO. We delivered another quarter of record financial results and generated our 10th consecutive quarter of record adjusted net revenue of $531 million. Record revenue at the company level was driven by record revenue across all three of our business segments, with 67% of adjusted net revenue growth coming from our non-lending segments, technology platform and financial services segment. On a consolidated level, we saw sequential and year-over-year expansion in our net interest margin to 5.99% and record sequential deposit growth of $2.9 billion, more on that later. The financial services segment also posted positive contribution profit for the first time. Finally, we generated $68 million in tangible book value growth in the quarter and $171 million on a trailing 12-month basis. He continues here with regards to the deposits. Total deposits grew by $2.9 billion, up 23% during the third quarter to $15.7 billion at quarter end, and over 90% of SoFi Money deposits, inclusive of checking and savings and cash management accounts, are from direct deposit members. The median FICO score was 743, which as a non-US, I had to check, and it's that pretty good. More than half of newly funded SoFi Money accounts are setting up direct deposits by day 30, and this has had a significant impact on debit spending, which exceeded $1 billion in quarterly debit transaction volume and was up 3.2 times year over year, representing more than $5 billion of annualized debit transaction volume. And as for the SoFi Bank, that generated $84.8 million of GAAP net income at a 19% margin. Now, with regards to net interest income, that came in at $345 million. That was up 119% from the prior year period and up 18% sequentially. Net interest margin, as we've seen before, 5.99% was a record for the company, up from 5.74% last quarter and 5.86% in the prior year quarter. Excluding the impact of a non-cash impairment of goodwill assets, we would have had a net loss of just $19.5 million. Definitely, this company is showing its strength in this weird macroeconomic environment, and you might even say that maybe they're taking some shares from the big boys. Now, with regards to share-based compensation here, it is down year over year for this quarter and also for the 9 months ending. It is down year over year. But if we go and look at the outlook, they say here that as the company moves toward expected GAAP net income profitability in the fourth quarter, management expects depreciation, amortization, and share-based compensation expenses to increase in the mid to high single-digit percentage range in the fourth quarter relative to the third quarter results. So keep that in mind. Now, before jumping into the other numbers, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. I believe we're just 9 subscribers away from reaching 30,000 subscribers. So maybe when you hit that subscribe button, you will have that 30,000 mark on my channel. So I already thank you in advance. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So the member growth. Record new member addition of 717,000 in Q3, bringing the total nearly to 7 million, and that's up 47% year over year. As you can see, a reacceleration of growth here quarter over quarter. As for the products, same thing here, reacceleration from 43% growth to 45% growth. We're now bringing that total to 10,400,000. That's up 45%. That's pretty impressive. As for Galileo accounts, we had a couple of quarters where we saw some weakness there. Last quarter, we see a little jump here in the number of accounts. Now we see an even bigger jump, but still just 10% growth. But they do tell us here that the technology platform segment record net revenue of $89.9 million for the third quarter increased 6% year over year and 3% sequentially. Record contribution profit of $32.2 million increased 65% year over year for a margin of 36%, primarily as a result of a 12% year-over-year reduction in directly attributable expenses. And they continue by saying here, technology platform total enabled clients accounts increased 10% year over year to 136.7 million from 124.3 million. The company has made great progress on our strategy to sign larger, more durable clients. Additionally, there is a robust pipeline of ongoing discussions with potential partners with large existing customer bases across both the United States and Latin America, spanning both the financial services and non-financial services segment. Very, very promising. Of course, they've been teasing that big whale that they have attracted or working with. Remains to be seen who that big whale actually is. Then with regards to lending and financial services product, lending increased 24% year over year. Financial services increased 50% year over year. And so if we go and look at the financial services productivity loop, again, the trend here is pretty clear. Q3 2021, 3.1 times difference there. Now we're at 5.6 times. And so if you want to visualize what we've seen and what we've read before, quarterly adjusted net revenue increased 27% year over year. Yes, growth is slowing down here on a year over year basis, but the number is already much bigger and the company is becoming more profitable. So EBITDA margin 18% now, and a huge jump here from $77 million to $98 million quarter over quarter. Pretty impressive. And now last thing here with regards to fiscal year 2023 non-GAAP guidance. So they expect to deliver now $2.04 to $2.06 billion in adjusted net revenue and between $386 and $396 million in adjusted EBITDA at a 48% incremental adjusted EBITDA margin. And they still assume positive quarterly GAAP net income in Q4. And as you can see here, the original guidance and the revised guidance for Q2 are lower than the one they're giving us today. So again, a beat and a raise here for SoFi. And so the annual growth is expected to be between 33 and 34% with an adjusted EBITDA margin of 19%. And so looking at the graph right now, earnings, it was either going up a lot or down a lot, but as always with SoFi, you're usually going up a lot and then maybe the stock is giving its gains back during the day. That was the trend previously, which again is hard to watch, but that's just the reality. Right now, we're back over $7 at pre-market, $7.26 or so. Remains to be seen what gets said in the earnings call, but for me, what would be best here is to start creating a base. Having those up, down patterns is usually not the best thing. Create a base at around $7 and $8 or so, and then let's move and make our way up. So that will be it for this video. Of course, again, great execution by SoFi and its management team. This company rarely does something bad. It's been beat and raised for a couple of quarters straight already. Next quarter, GAAP net income profitable. That's going to be something to watch. So that will be it for this video. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.